And joining us now here on Market Talk as we wrap up the week, let's have a discussion with Chris Swift of Swift Trading Company. He is with us here today. Chris, great to catch up with you again, sir. How are you today?
Jesse, I'm doing great. I certainly do appreciate this opportunity.
Well, thanks for joining Market Talk here today. Let's jump right in, not waste any time. Chris, really strong closes in the grains on Friday and solid closes in cattle and hogs as well. As you look at that livestock sector, look at cattle on Friday, just in general, what are your thoughts as we kind of wrapped up the week in the livestock trade?
Not really a lot happened in the live cattle market. We see the production side of it got a little bit better. They slaughtered a few more cattle for the week than what they did in the last couple of weeks. We noticed that boxes were soft towards the tail end of the week, and we know that exports are still very, very good right now for the beef market, and that we've slowed ever so slightly within the southern portions where we had to liquidate a lot of cows. Some of that is slowing down now tremendously. But other than that, just not a great deal happened in the cattle market. So we were a little bit surprised to see the firmer tone with as much as all other the input costs went up as well.
Yeah, I mean, corn market, especially on Friday, along with beans and wheat, all just kind of moving higher. Although looked like maybe a little bit of low volume in the grains, so maybe it was some of that algo trading possibly amplifying the move. But interesting to see us move higher ahead of a big WASD report on Monday, Chris.
Oh, there's no doubt, and the discrepancy between what last month's USDA came out with the most recent private forecast that we've seen, there's about a 7 to 8 bushel per acre difference in that, and what we're expecting is USDA to maybe narrow that down by 2 bushels an acre. If they were to do that, that might give them enough credibility to say, okay, they are starting to see some of the changes that the private forecasters do, but what we don't expect is for them to lower it dramatically that might cause a real scare to the market.
Well, Chris, thinking about input costs, a day like Friday where grains move up, and I think about feedlot country, how dry it's been, and how poor some of the corn crop looks in, say, Kansas, for instance. I'd love your thoughts on what we could see possibly moving into the fall. Are we going to have to see a lot of feed come in from other parts of the country, say corn, for instance, or are producers maybe going to look for some other sources, considering corn, high priced, might cost a lot to truck it in or bring it in by rail. What's your thoughts with as we get into this fall when it comes to feed across feedlot country?
Well, it's going to be basis more than anything. And as you say, the transportation issues are going to be very difficult. What we see primarily in the Southeast here is an inability to unload grain. We have lots of abilities either at our barge ports or even at some of the rail elevators. We have lots of ability to load, but we have very little ability to unload. When you get out into the Midwest there, granted, they have rail capability to unload there, but we can't seem to get the rail cars down there. So transportation logistics is going to be very difficult, and that is going to create a significant amount of basis spread trading.
As well as I look at cattle specifically a little bit more too. I know you and I were talking about this earlier this week, Chris, just looking at this cattle market and how it feels like a lot of people have been fairly bullish and bullish and bullish and bullish, yet we've kind of just been at this plateau and been stuck. And I have to ask, I mean, do you think that this might be it for cattle? Is this kind of the level we're going to stay at for a while, or do you think there's another leg higher here possibly?
We all tend to look back to history to try to foretell the future. And we have a great example, not only here in the United States, but in Australia as well, of major droughts caused significant liquidation. Then we went into excessive expansion. And the thing that I'll note is that Australia has already been through an expansion phase. Their expansion phase has been unable to bring the level of numbers up to pre-drought condition or pre-liquidation. So other factors have hampered that. A lot of it just being the price of cattle alone. Here in the United States, we put close to $30 on the price of feeder cattle. We have not put that much on the price of fat cattle, maybe 12 to 15. So it's not so much that we're not going to see higher prices. We're not seeing any margin increase. Higher prices do not necessarily make for profit margins on there. The price has to continue higher. And in answering your question, we may have beat everybody to the punch. We saw the aspect of a great need to expand in the market, and yet from a fundamental standpoint, we don't have the hay production to be able to do that yet. So we know we can rail feed everywhere, but we can't do much with hay. And trucking hay from one end of the nation to the other is very cost inefficient, and we just don't see that as much in that. So all in all, I think maybe we beat everybody to the punch in price, and now we wait to see when expansion really does start. It may be months down the road now, and nobody can handle this great amount of weight that they have acquired, or it could just filter in very, very slowly and not have a 1 or 3 month dramatic impact where you just pull all the cows and heifers out of the slaughter mix and make for a hole in the market. That's what I don't see. I don't see that opportunity to make a big hole in the market.
Well, and you mentioned those profit margins, and I know that that is a bigger issue, I think, a broader issue for a lot of our ranchers across the country, just with high price of inputs, et cetera, et cetera. You hit a lot of those points. I think profit margins, it's going to be an interesting thing to watch as we move through this fourth quarter and into the beginning of next year, what those profit margins overall look like, Chris.
Oh, absolutely. And we already know that they're squeezed to begin with. We understand that there are some companies within the vertical integration. There are some that are large enough to have alternative marketing agreements with the packers or with an end meat supplier. All of those factors will have to continue in order to bring more margin into it, or you have to have a significant increase in the price of beef. And that's one thing that we're not really seeing with the boxes now trading back under $260. We're not seeing the consumer in a financial standpoint position to be in a willing spot to increase either consumption or pay a higher price for it.
Hog market, real briefly as well. I know this cash index has kind of been taking a beating. It's getting closer and closer to that front month October contract. Any thoughts with what you've seen in the action in the hog market here in recent days in the last week or so? It feels like we're getting ever closer to marrying up the cash index with that front month contract once again.
Well, and we truly are, and the futures do settle to the index, so they will come together within the last 2 or 3 days of it before expiration. In the hog market, we have really curtailed our hog production down dramatically. We'll get a quarterly hogs and pigs report at the end of September. I think the only thing that you might see change wise is it stays status quo instead of another 1% or 2% lower in all hogs and pigs, or even the new the farrowing intentions. I think what you'll see is more stability in that, where we have in the past quarters we've seen a decline.
Chris, as well, before we wrap it up, I know again that report coming up on Monday, that WASDE report. Any other final thoughts or advice you would have for folks heading into that report? I always like to think about the fact that we don't want to get caught up at a big report day necessarily and trade day to day. We want to have that long term management plan, but I know a lot of folks are still maybe going to get caught up in some of those numbers coming up on Monday. So what would be some final thoughts heading into a big report day?
Well, I think what you got to look at again, like you're right. If you start trading for this event on Monday, you're very much behind the eight ball. The volatility for the options, especially, will create a much worse condition to have to do things in. So a little bit of planning out in front of this, regardless of what the numbers come out at. We believe that there is a lower corn crop out there, and the greater propensity of higher prices than lower prices. So the most simplistic way to go about it is to pick a point where you no longer want to assume risk. You're a cattle feeder, you are a poultry producer. Wherever you are in that need for corn, pick a price, and you've already got that price in your head because prices have been higher in the future. You say, I started losing money or started losing margins at X price. Pick that price, buy a call option at that strike price, pay the premium for it. If the market goes up, then you get to write that premium onto whatever losses that you've incurred on the feed bill. If the market goes down, every time you're buying corn cheaper, you add a few cents of that premium that you paid for the option to offset it. And granted, yes, now you are paying 3, 5, 6 cents more for that than what you could have. But what we don't know is we just don't know what the future is. And with as much money that is continued to be floating around, we have seen other markets go really, really high in volatility and price range. There's no reason to believe that corn can't do the same. Whether it does or not is of no consequence. We just know that it can, and we want to be prepared for that instead of seeing it at that price and then wondering what to do.
Fantastic advice. Well, Chris, I know you have great commentary. Shootingthebull.com is your website and your daily commentary, the midday cattle comments as well. I'm sure if folks want to learn more, they go to the website, give you guys a call. A lot of great ways to get in touch with you, isn't there?
Absolutely. And we always appreciate people calling into us, regardless of if they're interested in doing business or not. We believe that building relationships in this business is huge for everyone. We are privy to information that not other people are. We try to take that information in and then disseminate it out in a manner that might help somebody, a producer out there or purveyor of goods, to be able to make a better marketing decision.
Well, in fact, you can check it out online. Again, shootingthebull.com. It is great stuff as always, and we appreciate the time with that. Chris Swift, Swift Trading Company, thanks for joining us here on Market Talk today, sir. We'll talk again real soon.
Always a pleasure, Jesse. Thank you very much, sir.